housing affordability continues to be the main spotlight in real estate right now. Stay tuned to the end because we have those updated housing affordability index numbers for this week's market report for the Huntsville, Alabama area. So this week we're focusing on the October numbers. Those numbers have just come in. They've just been reported on. And let's go ahead and jump in and look at those. I think that one of the biggest keys right off the bat is new listings. New listings is down almost 200 listings year over year in just a single month. So if you extrapolate that out to a year, you're looking at over 2,000 listings lost for on an annualized basis. So we are down 12.7% year over year for October. And the reason that's such a big issue or big challenge right now and why it's such a big factor in what's going on in the marketplace, because a lot of people are asking, okay, so 2008 we had a big price correction. Why are we not seeing that now? We've had prices run up, and we've talked about a lot of that with dollar devaluation and supply and all those challenges. But here's the biggest thing: we have higher interest rates, higher prices. The logic would expect prices to start to come down, with that type of scenario. But the big thing is we still don't have enough supply. We have fewer listings going on the market. So the Fed is creating less demand by raising interest rates and lowering the amount of people that can afford to borrow and to find a home right now. But what a lot of people are doing is they are opting out on selling their home because a lot of folks have interest rates that start with a 2 or 3, and they are less motivated to make that move right now. And so with less supply, less demand, that's still keeping prices fairly stable here in the Huntsville market. So next thing is pending sales. Pending sales is a leading indicator of what's going to happen over the next month and 2 months, as most homes are under contract in the 30 to 60 day time frame. So pending sales were down 28% year over year, which is to be expected. There's less demand out there. There's less listings on the marketplace. So that's going to show kind of the next category. Closed sales in December is going to continue to decline. So closed sales for this month or for October was down 22.4%. And then our days on market as well, as you'd imagine, there's more inventory sitting on the market. There's less homes, but the inventory sitting longer. So that is going in the right direction. It was at a very unhealthy number at 17. It's lingered around 12 days on market over the last couple of years. So that number was up 29.4%. Expect to see, that's kind of one of those lagging indicators as well. As homes start to close, they start to calculate that number. I would expect for that number to dramatically increase over the next 1 to 2 quarters and get back to more of a historically healthy number. The next thing is median sales price. That is up 9.8% at just at about 305. Our average sales price is still around the mid 300 range. So that number I expect to stay fairly flat in 2023. And we'll talk about 2024 in some upcoming videos. Percent of list price received. This doesn't look like on the page look like a big difference. It's a 1.4% change from 100.2% to 98.8%. But this is actually a big thing for buyers. It's obviously a big thing for sellers as they're not getting as much home for their dollar, for their home, the value for their home right now. So why this is so big is it's allowing buyers to start to negotiate. And the other thing is the stat's a little misleading because it's just talking about the sales price. It's not factoring in other concessions, other negotiations such as closing costs and home warranties and rate buy downs and those type of things. So that number is actually bigger than it's showing. And this is a lagging indicator as well. So I would expect for that number to continue to drop. A healthy number is in the 97 to 98% range, and I do expect for us to see that number in 2023. That'll actually help a lot of buyers, especially first-time home buyers that need, they may have saved up for the down payment, but they may not have also saved up enough money for closing costs. So that becomes a very important thing to be able to get more buyers into the marketplace by being able to offer that concession. So that's a good sign for the overall health of the marketplace. It was really unhealthy when you could only buy a $250,000 or $300,000 home by paying cash and paying $40,000 above list price. That just locks too many potential buyers out of the marketplace. The next one, so we talked about this early on, the Housing Affordability Index, huge drop, 35.7% year over year. That's been one of the bright shining stars, and what's helped Huntsville grow so much is our affordability, our housing affordability. Obviously, as we continue to grow, we offer more, entertainment districts with Mid City and Providence, a Stove House, and Town Madison, some of those type of areas. There's more things to do. There's more jobs here. That number, unfortunately, like other growing cities, that number will likely continue to decline. So we're at 81 now, which means, just a quick refresher, a score of 100 means the average income can afford the average home. We're now below that. So the average buyer out there cannot afford to buy the average home in Huntsville, which is a challenge, especially considering that we have above average income in our marketplace. So expect to see builders make a shift over the next 12 months in 2023 to a lot of single family homes. From single family homes to a lot of more townhome type options, because townhomes are still above that 100 score index. And as you see a lot of cities grow, you see a lot of shifts towards townhomes and condo type projects for affordability reasons. And that's something that our marketplace just hasn't had enough inventory of. And a lot of that's just been because single family housing has been just so affordable in our marketplace. So expect to see that change. Unfortunately, the other change that I'm really seeing in the marketplace as well, that's not showing up on this list yet, it's really going to show up on that new listings category in 2023, is the shift of new builders, or builders shifting from a lot of new construction homes for sale, selling those homes, to getting those homes for rent. So build for rent is a big category that's coming to Huntsville, as opposed to just building a neighborhood, selling those homes off one by one to individual buyers. A lot of builders are shifting that strategy to selling the entire neighborhood to an investor, oftentimes Wall Street or real estate investment trust type money, and those homes turning into rentals. So that's going to be a big theme going into 2023 that's going to affect the supply and marketplace in Huntsville, which will likely push housing prices up in 2024, in my opinion. The next thing is housing supply. We've gone from 1.3 months to 2.5 months. Again, that's still a lagging a kind of a lagging indicator. I expect that number to continue to go up over the next several months. 2.5 months, what that means is if there were no new homes that came on the market based on the current absorption rate, how long would it take to sell the entire inventory out there? And it's going to be about 2.5 months. We really want to be between 4 to 6. That's what's considered a balanced market. So technically we're a seller's market. And of course, it really depends on the price point and submarket you're in, school districts, prices. We're still seeing really hot sellers markets in some of the lower price points, better school districts. And then we're seeing, the higher prices kind of sit on the market, being a normal market or even a buyer's market in some of those price points. So that is our market update for October. Expect to see a little bit of a bump in November because we've had interest rates drop. I think that's going to be a short-term phenomenon based on what the Fed's saying. So I think we're going to see a little bit of a bump in November, and then expect to see price sales kind of level back off in December. So stay tuned to see what happens in November and December.